good afternoon, or good evening. It is 12:13 in the afternoon on Super Bowl Sunday. I hope you guys enjoy the game, your barbecues, your alcohol, all those traditional things that you do if you're watching the football game. I'm going to try not to sneeze or cough during the video, but I'm not going to edit it if I do. As a reminder, I am not here on Friday. We have the 3-day weekend coming up, and I am heading for my 1-year anniversary checkup with my oncologist over there in Quezon City at St. Luke's. But as I was getting ready to start the video, I catch the news here on Twitter that Three Doors Down singer Brad Arnold passed away at 47 years old yesterday after a battle with kidney cancer. I wasn't making a mistake in the email I sent out there on Thursday when I was redoing that Al Pacino speech in the text. The 6 minutes that are in front of you, that's what you got. And when that 6 minutes continues, you're just continually getting another 6 minutes. Don't take it for granted. Enjoy every last bit of it. Don't hesitate. Don't hold back. Because it's not that you only live once. You live millions and millions of times during these years that you're alive. You only die once. So make it happen. So let's get over this. The week, green week, excellent. Excellent result, having a green week. Wanted that Dow 50,000. They got that Dow 50,000. I'll touch on that at the end of the video. But we also got a green month, which, as I was sharing when I put out the video there on Friday, that this is a very sensitive situation that we have here, being that we were red on the month, red on the year, and we already knew from all of the posts that were going there on Thursday, they are going to fight for that 68.78 11, and they fought for it, and then they took it to the next level and went through the 61.8 retracement, went all the way up to make sure the Dow 50,000 make prints on there, and you got yourself a green week, a third green week, which technically, depending on the way that you look at it, compared to how I look at it, you have 5 green weeks for the year. Minus 4.11 over there on the OPEX week of January. Minus 4 points on the week. I look at that as a green week, but this was a very technical trade that was taking place over here when we went into this since the all-time highs on the FOMC. 3 red days in a row, green. 3 red days in a row, green. But what's significant for those of you who track this is your range. Your range is starting to wiggle to the extreme levels to where now you're not that concerned about getting oversold on any 1 hour time frame because of a 20-point move, or getting overbought on a 1 hour time frame because of a 20-point move. You have an expanded range now to work with on your 1, 2, 4, your 6, your 12, even your daily now has an expanded amount of range to room. So it goes both ways, like I shared for you. And I have a trade for you to go into this week, which I'll share with you in the email. I'm not going to put it here out on the video. But over here on your QQQ, not looking as great. You had a green week to start out the year, and then a fractional red week. Down 1 point. Your big bounce over there heading into the earnings season kickoff. And now you've had 2 red weeks in a row, and you are down on the year. Down hard on the year, because you can't put money into everything anymore. You got to put it into one place. And right now, the only place is the Dow. That is the only place where the money is flowing into. And you saw that on Friday as your Mag 7 had absolutely zero follow-through, as the rest of the market did with the recovery that we had there on Friday. But it is still going over here on IWM. Multiple minus 260 visits. Couple of minus 260 closes. Then they turned around Friday and said, you know what, brother, we are not even close to being done with this thing yet. Right on back up there to 265. So, yeah, that is still pending here where the month of February is 258. You already had 9 green months going into this one. So 258.48 is your month of February, and you want to keep track of that. But yeah, we do have a lot of earnings this week. I'll go over that in a minute. I am not going to waste any time and get over onto the charts if I can pull them up. And here we go. First and foremost, the SPX. Looking at this from the very beginning of the year, where our 68.78.11 was our open. Hang on a second. This thing's killing me. A lot of choppiness, living up there in that 6,900 level. Couple of visits down to that low 68, visits down below 6,800. Then you got your FOMC and your nice big move to your downside, which took us right to 67.89, which is the last and final short-term visioned. Can this still be a bullish view to the upside? Wave 3, where we're still going up to 71, 72, 7,400. And that's exactly where they took you to there on Thursday. So that's where we're at, as I shared for you, looking at this from a broader point of view, trying to be as least technical as I can possibly be for those that don't understand how to make measurements, like an engineer or contractor. Looking at your Elliott wave. Our wave 1, excellent, right over there on December 11th, coming off of that November low. Our wave 2 coming right down there on February 6th. Was this? No, December 17th, the FOMC. 1, 2, 3, 4, 5, perfect. And then an A, B, C to the downside for don't know. Is this wave 1, wave 2 of the wave 3? So you have 1, 2, and then we are due to get wave 3, which will be heading up into the 7200s. And then your wave 4, and then your wave 5, and then you still have the bigger wave 4 and the bigger wave 5 before it's all over with, which, if you look at it from a calendar point of view, okay, yeah, so it fits. So it would go into October. But unfortunately, it's a little bit more complicated because what we had off of our bounce over there, which is essentially a almost perfect ABC bounce coming off of the November lows, your 1, your 2, or your A, your B, and then your C wave, or call it your C wave, right to 70.11.93. Failure. Could have been better if it would have gotten up to that higher point to be a perfect one, but it wasn't. And unfortunately, what we have here, like I shared with you on your email, you can look at this right now from a bearish point of view, where this is the wave A. We got our wave B, which peaked over here on Friday, and now we're due to get our wave C, which will be taking us down to around that 6,600 level. I'll expand it here to bring it into context to see a little bit better about what we are talking about with that. Yeah, right there to around 6,700, or to the Epstein files, which everybody's forgotten about now because we're still focused on the election having been stolen back in 2020. 6,700, 6,640. If this was to be, which again, you don't know, if this was to be that bearish continuation to finish it, and then we start moving to the upside, according to, all your technicals, then we're due to get a dip down here to around 6,700, 6,640. That would fit 6,720 being the big loss that anybody who's out there will tell you. 67.89 was your primary, 67.20 is your secondary. We didn't break either one of them. We came down for a visit to 67.89, so it's a little bit more complicated from a wider view than what you expect. However, on the bounce, like I shared, pretty damn simple. You get oversold on your daily, it doesn't matter if the NASDAQ has no teeth, it's still going to get courted. Bought, boom, bounce, right up off of that being oversold on your daily. Come over and look at your SPX, and again, same thing. didn't get extremely oversold, but got oversold significantly enough that you were coming in there and saying, you know what, it's time for us to get a little bit of a bounce. And you got a big candle there over there on Friday. Full moon high, full moon low. Both are pending. What I would need to see, me having done this for a few years and using it as an art, not a science, however, as an art, it allows for that ability to be a little bit more aggressive when the art starts to show itself. I need to see a break above 7,000 to say that it's a full moon low, or I need to see a break below 6780 to say that it's a full moon high. As of now, it's nowhere. All it is a big gray dot on a big black chart. Dow Jones, 50,000. It's here. Show you a couple things when I zoom out on this. However, from a technical point of view, that is some scary shit. That is some extremely scary shit. The Dow Jones is in neutral mode. Been in neutral mode for months. Neutral mode. But what we've got here, as we can look at this, coming off of the April lows, boom, 36,611. A nice 1, 2, a nice 3, a nice 4, and here we are looking at a 5. Well, where does the 5 line up to? Well, let's zoom out and look at that and put it into context. What we've got here is our 100 extension coming off of your big bottom over here, that being your bottom when Israel invaded Gaza back in October 23, your wave 2 bottom, your 1, 2, boom. That would be a perfect fit right there for a wave 3 of wave 3 to call this what Donald Trump is saying, 100,000 coming, which, you know what, I need to blow my nose real quick, so I'm going to take a quick break and let you listen to Lara Trump, who she tried to get into the Super Bowl, but they wouldn't take her.
Without your bravery, we're all out of luck. No, this can't be denied. You gotta be special. It takes a lot to put you last and everybody first. This can't be for life. Your heart, they can make gold. And the flames getting higher. You're my hero. You're my hero. You're climbing up the ladder, and the screams get louder. You're my hero. You're my hero. My hero.
All right, so again, yeah, that would bring you in with Donald Trump's prediction that you are going to 100,000 on the Dow before his term ends, which unfortunately, what he's not telling you is that his term is going to end this year. So I don't see you getting 100,000 this year. So they're zooming out, coming in this from a bigger, broader point of view so you can see this. Where we're at is off of that 2009 low. That's the end of your wave 3. This was your wave 5 of all of it coming off of the big bottom. The big bottom being where you came out from in the very beginning. Way, way, way down here, right? That's your bottom, right after the Great Depression. Your wave 1 top, right over here into 2007. Your wave 2 bottom over here into 2009. Come into that, you see your wave 3 high right over there very clearly as you went into 2022. Your wave 4 bottom as you went in there to the bottom of 2022. And now here you are putting in here, some decent movement over the past year as you just continually grind to the upside with a very slow grind, coming almost perfectly up to that Fibonacci retracement at 5368.64, which would be OJ's glove. It would fit perfectly if we could get that 5368.64. On the QQQ, I mean, what are you going to do here? I'm showing you 90 days. I'm going all the way back to where is this? October 3. Where are you going? You're going nowhere. You're going nowhere. Nowhere whatsoever. Nowhere. Every time you're coming up into the 630s, you're failing. Every time you're coming up above 623.70, or AKA plus 55% above the April lows, you're failing as well. However, you're still over here playing around with 600 as you got your one visit, your one close below 600, and rallied right back up to close below the 100-day moving average, below the 50-day moving average, below the 10-day moving average, below the 20-day moving average. And you know what, for shits and giggles, because I know it's not on here, but I'm going to go ahead and put it on anyway, just so you can see the 200-day moving average is sitting right there below 580. Go figure. There's Iran. Bull's first warning, right to it there on Thursday. Bull's final warning didn't quite make it to that, down there below that 590, which you see over here. Your big sell-off over here in November. Bears start winning. That's going to be a while. And then your IWM. I mean, come on. IWM coming back here into October. Your sell-off down to 228, and all of a sudden, IWM is the greatest thing since gravy. Nothing is better than IWM since gravy. And then just have a look at this as a basic clean. Let's see where we are. 1, 2, boom, and you can see doesn't show up on your chart, so you go and you expand. What this wants to tell you is that IWM is looking for 277. That would be your wave 5. Now let's look at this from a broader point of view. Your 5-week. We could take that part off because it's a little bit too broad. But that is looking at your 5 years. 5 years of essentially trolling and going nowhere. So when you look at this from a monthly point of view and seeing your big bottom over there in 2002 and again in 2009, you can see your 1, 2, 3, 4. Here's your primary 1, your ABC for your primary 2, your almost perfect primary 3 as you went in there to 2021 at 244, your primary 4 as you sold off and stayed down there for better part of 2 years, down there below that 175, 180 area. And now here you have what looks pretty clean when you come over and look at it on this point of view. Move it on to the right, and we'll change these to the red so that they show up and you can see where they came from. Right there. You've got a pretty clean A, B, boom. 274.70, 255.04, which 255.04, this was the reason why I started to get a little bit aggressive on this, with it being 9 green months in a row. And here we are in February working on a 10th one. So, 'tis what it is. So, let me go over here and bring you into the broader view of a few things. Gold. Love gold. Love the recovery of gold. Still want to see gold recover above 50.25. Once it recovers above 51.26, we will know that the gold rush is back on. Until then, we're looking at that 50.25 as being our problem area. On to silver. I like silver. I like silver a lot. I like silver above 71.52. However, silver's had a little bit more of a drawdown and been a little bit more, news out there with the scams and the shorts that have been happening over in Asia and in London. But yeah, silver back up above 71.52. I like it. Obviously, we would need to see silver get back up above 83 and push before we can start being aggressive and looking for that 115 that we talked about before. Bitcoin. Okay, so here on Bitcoin. You're not finished. You got your minus 50% from all-time high move down there to 63,620, but you're not finished. You should fail at 81,000 or so, and then after you fail from 81,000, you're looking at 51,000, 42,000. 51,000, 42,000 fail. Sayonara, baby. You're heading down to 28,000 once again. So, whether or not that puts you on the suicide list because you're a enormous fan of Bitcoin, consider yourself warned. For earnings, there's a lot of big names that are coming out this week, but nothing that is, so significant that we cover it constantly and trade it constantly, but there's a lot of stuff out there. As you can see here on Caterpillar, part of the Dow, absolutely berserk. Coca-Cola, pretty boring kind of stock. And here you are, pushing quite significantly well above that 72 resistance area that you've been trading in for the better part of a year and a half. But this we used to really consider to be a pretty boring stock. Robinhood, I love Robinhood. I love everything about Robinhood because Robinhood, as you remember when I was short, I didn't get enough out of it that I expected to get out of the short. But now Robinhood has made that commitment to the downside. And when you go back again to Bitcoin, as these Bitcoiners start exploding and start whacking themselves, a lot of those 10 million users on Robinhood are going to be no more. They're gone. They're finished. They're out. So, yeah, Robinhood back to 46.80, 100% in my vision. Lyft, I believe there was some stuff out there on Uber, but yeah, Lyft, would not touch this with a dead man's stick. Would not touch this with a dead man's stick. 16 bucks. Used to be a good trade when it was up there in the 80s, but not no more. Shopify, Amazon, same shit. And look at your reaction over here on Shopify. Look at where you're at over here on Shopify. So you want to go buy dips and start getting long with Shopify down here to the September 2020 highs at 115. I wish you the greatest of luck, and I hope that it works out for you. But it will not be me telling or advising anybody to be getting long on Shopify. Coinbase is going to be the last one I'll look over. And again, same thing. 444 down here to 144, and you have a nice bounce of 20 points. And people think this is great. Well, you had the same thing over there with MicroStrategy on Friday. And just because you got the bounce off of 100.01 back up there to that 137.05, don't start thinking to yourselves that you have a rally to 200 in the works. So anyway, guys, remember the Trumpster has already told you. He has already told you. Record stock market and national security. Again, got to do like the Nazis and create a fake enemy so that everybody can focus on that fake enemy. Driven by our great tariffs. Yep, I'm sure you're loving your spending capital the way it is now compared to the way it used to be. I am predicting 100,000 on the Dow by the end of my term. Remember, Trump was right about everything. Trump was right about the flock of seagulls, that's for damn sure.
Feel like I'm getting deja vu. This is like a rock war number 2. A rock war number 2. I like to look at those oil supplies. I'd be ashamed if someone invaded you. If someone invaded you. And I ran so far away. I bombed them night and day. But destroy USA. A drone appears above your head. A mower bomb comes falling down on you. Falling down on you. The fleet is moving nearer still. The Strait of Hormuz, it comes in view. The oil must flow through. And I ran so far away. The bomb I bomb them night and day. But destroy USA. and hits a big red button. Atomic bombs come falling down on you. Mushroom clouds in view. Send out a tweet to let you know World War III, 'cause Israel told me to. All for Netanyahu. And I read so far away. Oh, bomb I read, oh, bomb them night and day. Oh, and I read so far away. Oh, bomb I read, oh, bomb them night and day. But destroy USA.